Hello and welcome to this special episode of Market Masters on CNBC-TV18. My guest today is what I call an all-rounder, someone who is an economist par excellence, a stock picker and a gifted singer. Yes, we're talking about Manish Chokhani, director of Enam Holdings. Manish, thank you so much for joining us here.
Anuj, I only agree with the third one, not the first two.
The third one you can't disagree also. For those who have seen or who have heard your songs, it's, yesterday in fact I was hearing your song and, it felt like Hemant Kumar had, just come back into the world and he was singing. It was that good. But no, Manish, you are being modest. I think you're someone who has, a good pulse of both macroeconomics and picking stocks at right prices. I'm going to start with the macro because that's what is most important right now. We have had an election in which the market, in the end, perhaps got what it wanted, but there was a bit of a scare.
Of course.
So how did you read that outcome, and does that change anything for the market?
No, well, the markets already voted that they think it now is continuity. And while the outcome wasn't what the market expected, I think the market had baked in that there will be at least a simple majority of the ruling party and the NDA will come back with 300 plus. So this lower number of seats certainly spooked everyone. And then when the realization dawned that it's two very senior coalition partners in Chandrababu Naidu and Nitish Kumar, who are both probably towards the end of their career and little bit more likely to be statesman-like and looking for development of their states rather than what they can extract for themselves or their families, I think the market has calmed down a lot of it. And remember, Chandrababu was the original CEO CM who put the whole developmental plank and agenda in front of the country. So I think on balance, markets taken it well. Policy continuity looks to be in place. Of course, things will be a little more contentious because the breakup of parliament is now not so one-sided. And maybe in its wisdom, that's what the Indian public wanted, that there is some checks and balances. While we still like what has happened, maybe that's really what was desired.
We want PM Modi, but not with the brute majority.
Absolutely. So maybe I don't know. I mean, we are reading now post facto.
Post facto, yes.
But maybe that's what really, in its wisdom, the Indian public seems to have wanted. But doesn't seem to distract from the fact that what was achieved over the last 10 years in terms of fantastic infrastructure development, very, very great national security, internal security, the great speed and transparency of what was happening on administrative, IT, the digitization of India, the GST reform. So a lot of good things have happened, and one is expecting continuation of that to make, as I say, velocity of doing business in India faster and easier. And that's really what the market seems to be signaling and the world seems to be expecting from us.
Okay, since we are on the topic of macro, a couple of other issues that I want to discuss with you. Currency volatility in India has completely died. It's almost as if the currency market on a day-to-day basis is not trading. And B, we have seen continuous FII outflow, at least from the secondary market, and that gap being filled by the retail investors. What do you make of that?
No, so two things. On currency, it's a different game because what the West has continued with its printing, and even while the central banks signal that they are doing a reversal of quantitative easing, the government balance sheets have started deteriorating because the fiscal balances are going absolutely crazy. So I don't think monetary tightening is happening anywhere in the world, and that is what is reflecting in commodity inflation or the rigidness of inflation which is happening in the world. And because the world knows there is a lot of inflow eventually going to come into India, the currency is expected to actually appreciate, and I think we are doing the best to keep it down. Whereas other currencies in the region have all started again falling. The Indian currency has remained very strong despite, as you say, some outflow from foreign equity investors, because inflows on debt side, remember, are going to be very strong. And it's almost inevitable in my view that the equity investors from overseas who are waiting for a break in Indian prices never got it. But any dip in this market, I think there's a wall of money heading our way.
You say that because of the bond inclusion?
Bond inclusion has happened in all the indices, and I think a series of that will continue. And same way in equity indices also, it's almost inevitable that India's weightage starts going up because our the index share compared to GDP share, I think lots more. We're still like barely sub 2% on the indices. And remember, markets tend to vote on future profit potential of our economy. And the Indian economy at 4 trillion and whatever 5% profit share at 200 billion is not the sum and substance of what India will make. So over the next decade, definitely I expect our currency to be substantially stronger. It has to be actually a freely traded convertible currency, and moves are already being tried in that direction. But I don't think that day is very far where you'll be able to go out and actually not say I have to carry a euro and a dollar with me, but hopefully you could go and do all your buying overseas using Indian rupees. But anyway, that's for later.
That's for another day. You said
Yeah.
that FI money will soon come to India. When will that come? Because we've been waiting for that.
So, well, I was listening also very keenly to the Morgan Stanley folks who really have an edge on this. But, and I was also in Europe, last few weeks. I think the amount of interest in family offices and people with substantial money, and even the retail, because they have all now heard that India is the next thing. And I do think, and I've been saying this for some time now, that India will be a repeat of what happened to emerging markets in 80s when Japan and Taiwan took off, and those markets went 10 to 12 times and became a bubble. Same thing happened when China took off, and that market also indeed went into a bubble and then has been correcting ever since. The conditions are such that India will create a bubble. And maybe retail is kind of smelling it. The institutional investors are obviously, they have to rotate their money as private equity and so on, those are the fellows selling. But when you get a wall of money, and largely it comes through ETFs and passive flows, they tend to be price agnostic. So as and when this happens, and I even read Ashish Chauhan saying that the Japanese have launched a ETF, and the money which then comes, because the wealth in these countries which is earning very, very low yields and doesn't see a lot of growth prospects in their economies is very large. So one can't time it, but I wouldn't be surprised you get like 50 and 60 and 70 billion dollars of inflows coming to participate in a market, which in the context of a $4 trillion market cap is not something so crazy, but it just creates that final climax.
So that is very interesting, because Manish, you know what, at the end of the day, the most money is made when you are actually entering the bubble phase, right? Now the issue is, you gave the example of Japan. Japan never touched its highs for 40 years.
That's right.
So are you saying that in next 5 to 10 years, we could be headed that way, that we have the index going up maybe 8, 10 times, and then
So
for many years creates a
that's both a, how do I say it, it's a opportunity as well as a fear, that the country needs to absorb that kind of capital to use it to grow. So it's possible, because a lot of people know this history the way I do, it's possible that the larger companies then go out and raise $10 billion directly in primary issuance, rather than that money coming into secondary market. That itself would also help to create, in a sense, a real bubble.
absorb some of that.
Secondly, I know our regulators and the ministry also should be aware of this, that you don't, as an investor, even I don't want a bubble.
Yeah.
Because you get, great returns in a year, and then you spend the next 10 or 20 years making nothing. So it's great if it doesn't happen. But all I'm saying is, looking at the conditions and the speed at which this market now works, and the way the computers are now programmed, and the way the flows are into ETFs and passive price agnostic funds, I don't see how, whenever it happens, if it happens, one will be able to prevent this from happening. So the only response, the fastest response doesn't typically come from regulators, it comes from private sector. And my belief is the private sector will participate by raising $10 billion. It could be, for example, it could be a Reliance or an Adani going and doing a $10 billion raise each for one or two of their entities. And that could absorb the capital, because capital clearly wants to come into India.
Okay. What about retail? Because we all through the 2000s and early 2010s, the belief was that retail always comes in at top.
Right.
And this time it's been different and refreshingly different.
But it's even been a top now. So it's rising top, rising bottom. So why do you say retail has come at the top?
No, I'm saying this time it's different, because retail has managed to not only come at good levels, but stay put. And the best example was the verdict day, when you saw so much buying by retail.
That's right. Yeah, that's actually true what you say, that on the day of verdict, maybe the foreigner was very excited that if things go a bit awry, we can get invested into India. Because by and large the country will go on its trajectory. And retail didn't give you a chance, because that money just quickly came in. So you're right in what you're saying. And therefore, as I say, if retail doesn't let up, and it doesn't look like it will, the domestic money anyway doesn't have anywhere else to go. It will, the domestic as in family offices and so on. And the foreigners are very anxious and desirous of coming in. So anytime they see a small break, or with some passage of time, you see that money coming in and there's only buyers from all three sides and there's no seller. That's what I call the conditions for a bubble to get created. Which is why I think it's likely. I hope it doesn't happen, because bubbles, while they are exciting on the way up, they are devastating on the way down. And then the aftermath is very, very bitter. So I hope it doesn't happen.
But we are still some distance away from that.
So Anuj, what's happened is small cap, mid cap have actually experienced a bubble, because some of the prices are just fantastic. I don't think
we are already in
I
bubble
think
in
some
small
of
cap?
those prices people will not see 10 years later. The companies will perform, don't get me wrong. I'm bullish on our economy. I think we get to number 3, and eventually in this century we will be number 1. We will be the largest economy in the world. I also feel there is money to be made in our markets over a decade. We make 3 to 4 times on the index every decade, depending point to point. But if from this point you think on mid cap, small cap, you have to make money, you have to think of a decade ahead. I don't think over the next 3, 4, 5 years, you should be thinking I'm going to make this kind of return here. The index, however, and why we are still okay, is the index constituents haven't really participated. So the larger ones, as I said, the Reliances, the IT, the banks in particular, they haven't participated in this. And that climax finally, when foreigners come in and they have to deploy large money, it typically comes into the top 100 stocks. And that's when you finally get the parabolic rise.
No, that's the paradox, right, Manish, right now, because for an investor, you might be thinking an HDFC bank right now perhaps represents a far better value than, say, a defense stock or an EMS stock. But, an EMS stock has still given you 30% returns in 3 days, and an HDFC bank is still where it is. So how do you make that decision in that case?
So look, if I look back 3 or 4 years ago, I remember on our shows we would talk about exactly EMSs or PSUs and so on, and they were dismissed that
the
these
hated
are
space.
inferior businesses, not good businesses, and so on. And it's from those spaces when the earnings get delivered and the surprise comes that the P also changes. So you got a double effect in all the spaces that we talk about. PSUs in particular have led actually this rally. Power, infrastructure, real estate, which were the hated stocks of the last cycle of 2008, have actually led in this rally, because in cyclical upturns, these are the types of companies that perform. Having said that, as an investor, you should always be thinking what's the hated space in the market today, not what was great yesterday or 1 year ago or 2 years ago. So from that perspective, again, I draw back to history. Infosys was a great business in 2000. The stock did not perform for 10 years. The business did brilliantly well. The stock did not perform for 10 years. Prior to that, Hindustan Lever has experienced it, where the stock did not perform for 10 years, from 98 to almost 2007 or 8. And similarly, Reliance also, which had led the 2007 bull market, did not perform for 10 years, and then it quadrupled in this last period.
Yes.
So a lot of these companies, as I say, they have done well, they will continue to do well, but the stocks may actually not do as well in the coming few years. That gives you a chance, if you indeed want to rotate, to go into something which is a little bit more hated today, because if this market is going to continue climbing, it's a rotational market. It's not only a sector which can lead. It will keep rotating from sector to sector, and therefore the final climax has to be made where people haven't participated. And the largest money, in a sense, has to get made in financials, because that's where the bulk of the index weight is also.
All right. Well, let's do one thing. Let's take a quick break. We'll come back and resume this conversation with Manish Chokhani.